So why should the stock market stop going up?
Yes, Scott, I agree. And Kevin, to your point, we also have to think about the fiscal policy. The recovery pumped in over $1 trillion into the markets, into companies buying bond ETFs. So this is propping up the market. And what we're seeing now is the liquidity of the market has been induced. And so that's what we're seeing. So this is not a typical market. We would not expect this in a typical framework, but with that liquidity added to the market, this is what we're getting.
Joe, I see you're not adding any equity exposure here at all. Do you not believe in the narrative that we're just trying to build here on the show today? Because if you take the Fed, you take the tech surge, which seems to be ongoing here, the belief, as Kevin said, that you're going to have therapeutics or a vaccine. And then, as the Wall Street Journal points out today, you have mom and pop falling in love with stocks again.
Yeah, it's a very complicated position to be in, Scott. Adding equity exposure here coming into the fall, I think, is a challenging predicament to place yourself in. Understand that I am positioned extensively long. We are now experiencing the 5th consecutive positive month for equities. To Kevin's point earlier, what is also experiencing 5 consecutive months higher is the price of silver. So I think as you look forward into the fall here, I do think you're going to experience a modest correction at some point for equities. I said last week on the show, though, that correction will be very modest. You go down 10% and you're nowhere near the 3,000 level. So we didn't see 2,000 at any point after 2016. I don't think you see 2,500 for the S&P as we move forward over the next 3 years. I think the Federal Reserve put that is underneath the market is supportive for equities, but I think it is warranted to give consideration to a potential of a modest correction. And so, I think that's the...
let me ask you this. Why is the move in silver a sign to you that you could get a correction in stocks?
Because I think it's indicative of an uncomfortableness with the potential inflation outlook, again, that Kevin talked about at the beginning of the show. Both gold and silver, a lot of alternative assets have been rallying alongside of the NASDAQ moving higher and the hyper growth stocks moving higher. So I think that's indicating to us that there is budding volatility, Scott, underneath the market. And I think that's the first place I would look if you're looking right now to protect portfolios from a risk management standpoint. Look at the cheapness of volatility. I would be buying volatility, and I have. I think that's the right trade to protect the portfolio.
Shannon, what's happening in the month ahead? Do we just continue this run that we've been on, or do we have, as Joe says, this correction looming?
I think there's going to be discomfort with some of the economic data that's going to come out over the next couple of weeks, Scott. We've already seen consumer confidence decay. We're going to see deterioration as, the July 31st expanded unemployment benefits, those went away. And we're going to see that in the data that comes out from a consumer spending perspective in August. The consumer needs to be rallying this economy forward. And so if you think about why you're investing in some of these cyclicals, and we've talked about this, give and take on the value rotation, but at this juncture, unless you see that continued consumer spend and that trajectory, then, we're going to lose some steam in equities. And we've been cautioning our clients against this over the last couple of months, anticipating that September could be a bit rocky. And we're coming into election season as well. It's this nexus of events that are going to create some discomfort for investors.
Shannon, the only pushback is that the stock market is voting repeatedly that none of that matters, that nothing, in fact, matters except for the Fed.
It doesn't in the long term. To Joe's point, I'm not calling for a 20% correction here. I think in the long term, the Fed remaining, I think this policy announcement they made last week was not surprising to anybody who's listened to any of the comments being telegraphed by Powell over the past 6 to 9 months as it relates to interest rate targeting. So I think you're right. Longer term, the Fed remains, at our backs. But in the near term, they're certainly going to create an opportunity for a few things to be pulled back, some profit taking. But I do think this economic data that's going to come out is going to matter to the market.